All right, let's see. Got my little stick dudes. Who do we got? Okay, let's start here. We got a lot of cool stuff to talk about. Actually, we don't have a lot of cool stuff to talk about. We have a few things to talk about that are very cool, but that's a lot. Oh, so before we get started, let me take you through the sticks. So, oh wait, you got to see their feet. Hold on. They have cool feet. Take that off. We get it. We're talking about infinite versus finite games today. Probably the one thing that'll make you more money in the rest of your life than anything you ever hear on any of these stupid channels ever. But no big deal. Let's talk about NFTs. So we got this guy. Little SEC grenade. All right. Boop. Nice 8-bit shoes. Boop. 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 Of course, XRP army, right? Boop. Boop. Cowboy hat, Terminator, Ben Gortzel. That's right. Anyway, so lots more to come. But anyway, we're getting a lot closer. Every day we get closer. Okay. Let's go back to here. Let me say hello to some people. We have Dowd Heister, Unsung, CC Brown, Gordon Bennett, Joe Pirate, Euphora, and Spirella over on Theta. Hello. Bonjour. Comment ça va? We are going to go over here and we're going to say hello to Joe Fernandez. And listen, if you guys are on Twitch, YouTube, or any of the ones that I can see the comments directly on StreamYard, then I can kind of put your little hello, you know, your salutation, your greeting. JD, what up? Let's see, Todd B. And Alan. What's going on, Alan? San Francisco's got to be cold as hell up there. El Paul, Bitcoin Candy, Casperia Cloud, Michael Murphy, Nara. I get that a lot. 2020, Cool Cat. Wow. Jerry in the house. What up? Tico Blanco. So you guys know how it's going to work, right? It's either going to be a 6-week or a 12-week reveal period. We're either going to do one trait reveal a week or two, like Tuesdays and Fridays or Mondays and Saturdays, some weird thing. But once or twice a week, we'll do the trait reveal. So when you get the first, you're just going to get this. Well, without the necklaces. That's where you start. So it's going to be kind of cool. And no one's going to really know what they have. Now, they might have one of the magical skins, gold skin, trippy skin, something like that. But other than that, you're not going to know what your character is going to look like until the end of the entire reveal period. And then we'll do some more crazy stuff. All right. Dubai Money, what's going on? Michael. Hello. And let me, we're scrolling. YOLO Buck, Demayan, Archick, Suze, Rod. What up, Rod? Tube Dap Pipeline, Audrey, Chris. What up, Chris? I'm back of Doge. Yeah, I don't know, man. We do make fun of Doge in there, but I don't know if we have a bag. I have to ask Brandon about that. Biotech Breakout. Chris, what's going on? Thoughts on PulseX? No thoughts. Zero thoughts. Amy, what's going on? Expat Matt. JJ in the house. Plank owner. Brenda. Luis. ¿Qué onda? Frank. Al Greco. Tim. Marcus. Red. Hello to everybody. Vincent. And 901 Onion. And then we have a few more. Hude. City Medianco. And Sniper Princess. I think that's it. I think we got it. Okay, so we'll go and do our non-commercial break. We will come right back and we will get into the guts of it. We'll do a quick price review and go from there. So I will see you on the other side of like 90 seconds, I guess. Maybe I'll do the 60-second one. Maybe the 60-second one. So we look at some prices. Belinda Cook, what's up? Okay. If you guys, Phil, what's going on, buddy? If you guys have questions, to make it easier, maybe what we do is you just do a little Q, like not a little one, like a full service Q, a capital Q and a little dash. And then as my eye is scanning through these comments, because I don't have a fancy producer, I don't have Eric with me when I do these Tuesday, Thursday things. So I got to use my brain box. All right. But if you put a little Q, I will know you have a question. And try to keep the questions not so obscure. You know, I'm not going to tell you to buy or sell anything. And, you know, if it's a project that's got like a $20 market cap, there's a good chance I don't know about it. So anyway, Neil, what up? Okay, so let's get to some guts. The Bitcoin 43, it's down just a hair. It was actually doing quite well. It was in mid 44s, and then it got kicked in the softies about an hour ago. There's no way to, I mean, you just can't keep tracking the news and do all this kind of stuff. If you're trying to trade, it's very finite. It's very near term. We're going to talk about playing in game theory. There's different types of games. There are finite and infinite games. We're going to go into the mentality and how you want to be an infinite game strategist, not a finite game strategist. Chris, what's up? And let me start. Jerry had a question. But what is the process for letting you know? What is the process for letting you know I have a question? Well, Jerry, then you just put in capital letters, Jerry has a question, and that takes precedent. All right. So listen, Bitcoin on the week is up, which is great. And the 30-day, it's down about 8%. Is there value in Bitcoin? Well, yeah, it's the only store of value in crypto. I would say it's the closest thing to a safe liquid asset in the crypto space, but caveat that with in the crypto space, because if you compare it to other assets, the volatility might make you very uncomfortable. But with those kinds of volatilities come the kinds of rewards that you get. So there you go. And that's a good general question. Even though you didn't frame it right, Gil, but yes. Do you hold your coins on exchanges or all on cold storage? Well, it's not an all or nothing. There are different reasons to do different things. You might be farming some of the yield that an exchange or a holding facility or a lending facility offers. So like Nexo, you might be farming the 12 to 18% they'll often offer on various assets. And then you would push it back either to Kraken or to a private wallet or to a place like, if it's Cardano, to Daedalus, where you could have a little bit more control over your assets. So there are degrees to everything. I don't think that everybody is better off with all of their assets in cold storage, because then you have a fair degree of risk. If you lose your cold storage device, your passphrases, your keys, you think, oh, I won't. Okay. Well, Jerry, I'm sure you remember the story of the guy at Ripple who did that very thing. He had what was called, I think it was called an iron. It was an iron key or an iron safe, whatever. It was, just imagine like one of the thumb drives, but you have 10 tries to enter the password. And after that, gone, nothing. And he had many tens of millions of dollars worth of assets on there. And he's an executive at Ripple, and he couldn't, Stefan Thomas, and he couldn't get it done. So just be very careful. So it's not always, when you take full responsibility for your assets, you take full responsibility for your assets. So just make sure that you understand what that means. For a lot of people, having some degree of exchange exposure might be safer. And I know that the Bitcoin Maxi is like, not your keys, not your crypto. Da, 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 da. And I get it. That is true. But lost your keys, lost your crypto. So they don't usually say that one. But I guess the dudes that lose their stuff don't go on Clubhouse for 14 hours a day. You think it's weird that these dudes that run companies are on Clubhouse all day long in Clubhouse chats, but yet they run these companies, you think maybe that they're farming people from Clubhouse? You think maybe that's their business strategy? Clubhouse is a place where ideas go to die. Okay, let's talk Ethereum. Ethereum's got a lot of problems, but Adoption is not one of them. You want to look for the next best asset with use, utility, and adoption. And probably use-wise, I would say that there's much more use of Ethereum than Bitcoin, if we're being honest, right? Bitcoin is used as a store of value. That's good. It's certainly well adopted, but the utility in some, you could argue that maybe the utility is lacking for certain aspects. It is not money. And what Bitcoin may have started as a peer-to-peer payment system 12 years and change ago is not, or 13 years and change ago as of January 9th, Bitcoin Day, is not what it is now. It's morphed into the store of value. Well, Ethereum is funny because Ethereum tends to get used for interesting things and then for perverted things. So you had Ethereum came out, we had cool, man, smart contracts, we can do all sorts of cool stuff like ICOs. And then the ICO that was a clear chaos bubble because it was a bunch of people doing very sketchy things and basically stealing. It was a way for people to anonymously steal, if we're going to be honest. And I would say a lot of those companies that ICO'd in 2017, they either don't exist or the prices of their asset are nominal. And the people that started those are in various degrees of avoiding prosecution. So there was the ICO boom. And then there was this big, long chasm, and there wasn't any real true competitor to Ethereum. So first mover advantage, yes. Then we go DeFi. Well, what was every other project that got nuked? It was at first DeFi. And then what happened is people in this quest, this thirst for lower fees, people ran and they ran two assets in the DeFi space that were suspicious, to say the best. Many of them were launched on Ethereum. Not all. You had Binance, Dumb Chain, which the technology is probably not so bad. A lot of backdoors, a lot of glaring problems, a lot of CZ Binance pumping projects that got rug pulled. So what happened is the same thieves, very likely, that hang out at the same bar from the ICO phase that ripped everyone off, came back and said, look, in DeFi, we can really rip everyone off because these people are too stupid to know what they're doing anyway. They almost expect it. You might even be, you can see the rationale. Look, if they put all this money in these projects they don't understand, they deserve to lose it. And I don't think anyone deserves to lose money, but one should not be surprised if they lose money in the DeFi space. So it's kind of like you get what you get. And I don't want anybody to ever lose, but if there's a place to lose, DeFi is where you go to lose, right? Like if anything Mark Cuban does, that signals the top. He bought a Bored Ape. I'm a little uncomfortable about Bored Ape prices because Mark Cuban owns one. It's usually the death knell. He invested in some project with just today, some project that guarantees you 10% yield. And it's and who's his partner? Like the CEO of Robinhood. So there's two geniuses together. So I would want to short that. If I could short that, I would want to short that. So anyway, because Mark, I call the top Cubans. All right. So Ethereum was the main token for the ICO phase. It was basically the main token for the welcoming of the DeFi space, decentralized financial products. The idea was that they would be completely decentralized. Most of them were not. Obviously, if you can get rug pulled or you can reset a platform, it's not decentralized. It's some degree of centralization, right? Someone's got their finger on the trigger. And then non-fungible tokens. But you can't argue that Ethereum does not have value. So it's one of those things. Now, as the entire space expands like a big fat balloon, do I think that the expansion will be less exciting, less enigmatic for Ethereum than for the other layer ones? Yes, I think the other layer ones will start to absorb a lot of the tension and a lot of the frustration. I also think that when people leave Ethereum, companies leave Ethereum, they're not coming back because it doesn't make sense. Why would you go back? Like after you upgrade your phone, do you go back to, like, when you grab the iPhone 13, do you just one day go, you know what, I'm going to go back to the iPhone 4? No, that's wrong-minded. And so these companies even small companies put a lot of R&D and development and manpower and sweat and tears and all that into these projects. So if they go in another direction now, when these other projects have functional EVMs, I think you'll see a further exodus, which probably would be good for Ethereum, because there is a marginal price where I think the market could accept a higher price of Ethereum, but a more comfortable fee structure. And especially, in the NFT space, if you're dealing with $100 non-fungible token, paying $100 in fees, it effing sucks. But if you're dealing with a $200,000 NFT or a $740,000 or a $3.6 million NFT, then the $100 it's a marginal cost. It's a rounding error. It's not even a rounding error. It's not even big enough to be a rounding error. So what that does is it does tend to push people out of the NFT space. In the NFT space seems to be the sponge that's absorbing a lot of those fringe adopters that were not super interested in crypto in the first place. So here we are. Hello, Be Happy Crypto Gamer. Patsy, what's going on? So yeah, so that's kind of where we're at. All right. Layer one action, Ada. Let's just go through the whole list. It's easy. There's really like one standout, and it is Near, and it continues to power forward. And many in the space have been talking about this asset for a long time. You're seeing a lot of companies that would be launching, that would be likely to launch on Ethereum, are turning to Near. Why? Because Near right now, this second, is already everything Ethereum 2 wants to be. This decade-long transition that Vitalik talks about, they're going to do all of that to get to where Near is right now. This second, today, you can go and launch a project with Near software, and it's easy, and it's cheap, and it's elegant and clean and fast and efficient. So, when you look at this space, you might say, well, crap, no, am I too late to it? If you're almost at a 10x, Pablo, you need to take some off the table. Remember, do you guys remember the rule? And this is a rule that will save you. And yes, Near may go to 100. Matter of fact, I imagine Near will go to or well past 100 a token. But you have to take profit on a regular basis and convert to either stable asset, to regular currency units. Yes, Pablo. So I would urge you to consider. You don't do anything that I say. Remember, always ask why, not what. But I would say, I would sell 20% of any asset that does a 10x, because money, and you don't always know the direction of these markets, and sometimes there can be near-term, fatality and all this kind of stuff. So I don't think you want to try to time markets in a general rule. And you can run this. If you don't believe this, go back test it with Bitcoin. Take Bitcoin, pretend you bought $100 of it, $100 worth of Bitcoin when it was 1 penny. Okay. Hell, make it simpler. You bought $1 worth of Bitcoin in 2009. Okay. You have 100, and it goes to 10 cents, and you sold 20%. And now every time after that, every time you get a double, you sell 10%. You would have made millions of dollars off the $1, and you would still have Bitcoin to sell and to park on places if you want to grab some yield, or to sell some options against it, or whatever you want to do to monetize your otherwise unyielding assets, yieldless assets. Make them perform for you. So you need to have an exit strategy. And it doesn't mean that you believe in Near any less. It doesn't mean you believe in any of these assets any less. If you get a 10x, sell 20%. Okay. Don't leave it on the table. Plus, you might get an opportunity where there's some big sell-off, and you can go back in. You can rebalance into other assets where maybe the portfolio got skewed because one asset moved really, really fast. Let's see. Gil says, some people say everyone should have 0.1 BTC. Can you do the analysis on how this can be life-changing? Well, no. Here's what I think. Everyone should have some Bitcoin. I don't think there's a number. I don't think anybody can give you a fair number, because there's no correct number for what you should have. We're all individuals. We're all different. We all have different needs and wants and desires, and people that like us and hate us, and enemies and friends and all this kind of stuff. So you may want to buy a house. Nara may want to buy a Ferrari factory. Jerry may want to start an institution for better crypto and poker playing in Costa Rica, which he's already building like a compound. So we all want different things. Whatever your version of happiness is, how you get there, well, that's determined by what makes you happy, right? What makes us all happy is different. But I will say this. I think people should have about 20 to 30% of whatever they invest in the crypto space, specifically in Bitcoin. Whatever that number is. If you have $10, $2 to $3 should be, I think, in Bitcoin. And then I think the next 50% should be in layer ones. And then that gives you 20 to 30% where you'll break it up into layer twos, a little bit of stable coin. You want to have about 5 to 10% stable coin, and then about 10% that you could break off into AI, some dApps, some lottery tickets, things like that. And how can it be life-changing? Well, look, $1 in Bitcoin in 2009 was 100 Bitcoin. And 100 Bitcoin at 40,000 is not $1. So you have 40,000 times 100. So it's like $4 million. Anyway, it'd be better to be a millionaire than a dollar heir. So there you go. There's your experiment. But again, you're not doing this because price, right? You're doing this because percentage. You want to preserve, if you really want to reduce this, we're just trying to find places to put our currency units to preserve buying power against all the other options and opportunities. And so you look at a market and you say, man, can my currency units preserve more buying power by spinning off more currency units over here versus over here? That's the math. That's the game. Let me, by the way, say hello to JJ Chang. Hello to Max40. And if I missed anybody, let me know I missed you. Crypto Gamer 420, good to see you. India is launching a Bitcoin ETF. Interesting, because India is so back and forth, right? They're so back and forth with their, we hate crypto, we love it, and they just realize they can't regulate it. They should know a little thing about not being able to regulate. Megapack, what's up? Because they've not regulated a lot of things for a long time. Okay, let's continue really quick. So I think look at your layer ones, but your layer ones, what's doing incredibly exciting right now is Near, and I don't see it stopping anytime soon. There's no reason Near, a layer one that has all this functionality, should have a smaller market cap than Matic. Even if you say that there's a bias on Matic because it's helping Ethereum handle some scaling issues and whatnot, in my opinion, it's not justified. Bunny, what up? So I think you have to imagine that it will surpass that, and it should probably be floating around Polkadot. And if that's the case, there's another 2 to 3x in it just there, and that doesn't even consider some expansion. How much can Near scale? Well, Near, as far as I understand, and I'm not a software engineer, but Near can scale up and to the right. As far as transactions per second, things like that, I'd have to dig in a little deeper to give you those numbers, and I don't want to lead you astray. But go bang around. If you don't have any exposure to Near, I don't think you should pile into it, but it should be part of your layer one bucket, that bucket of layer one assets. Okay, Cosmos has performed quite well. It's down on the day a little bit, but you know what? It's had a pretty tremendous, I mean, it's kind of near, right? Similar market caps too. So we have an 83% month, 110% month. We're up 1 on the week. It's had a quiet week, but it's had a pretty exciting month. It should be in the bucket. Algo has been kind of quiet. Why? Because they don't talk to anybody. They talk to nobody. Okay? And not only do they talk to nobody, they don't convey their value proposition. Algorand has awesome technology and terrible communication. And I know one of the guys that's in their marketing department. They're so quiet. If they would speak a little bit more, it just would be so interesting. And Crypto Gamer asks, let's see, this is a good question. If Near is ETH 2.0, then what is its scaling factor? Yeah, I just said that. So I don't have their actual, let me tell you something though, that's an interesting question. The transaction per second arguments, they're kind of flawed. Transaction throughput doesn't mean anything because you still have to communicate with the network and validate transactions. It doesn't matter how many transactions you can jam into a block, it's how fast you can do it. And most of those numbers are bogus anyway, but it doesn't matter because you still have to propagate that block. And there's just some realities on how the internet works and how communication between nodes work that you can't get past. You can have a 500 trillion transactions a second, but none of it's getting validated. Look at all these quasi layer ones that have tons of transactions per second, but in the real world, what do? They melt down. Oh, blocks are getting surpassed. Oh, the network's freezing. There's just some realities of the rail. So it's like, imagine like you're the fastest runner in the world, right? Faster than everyone. But the last mile of the marathon, you have to run through the mud. It doesn't matter how fast you are, you're stuck in the mud and you're going through. And so the mud can be looked at as everything after your block is created, right? Everything after consensus. So just be careful that you don't fall into these TPS. It's comparing TPS is not like comparing, right? So I think that's kind of a flawed argument. I think what you want to look for is accuracy, efficacy, the way transaction validation occurs, the way consensus is determined, the way that the network propagates blocks, the way that it validates those at the level of either the stake pools or the the other node operators. That's what's important. And consistency and uptime. If you look at uptime, the network only has uptime, right? They don't get blown up. They don't melt down to zero and then blame it on DDoS attacks. So, okay. Crypto Fanatico, what's going on, man? How does Moonbeam play into the EVM picture? Everybody's coming out with an EVM. So I think it's going to make the space a lot better. I think it's not a one or a this or that. It's an everybody type thing. Everybody's going to have a functional EVM. And then what's going to happen is companies that are looking to deploy new products are going to look and say, what team do I feel safest with? Maybe it's Moonbeam. Maybe it is not. So that's the thing that you have to realize that people, and many of you might be part of teams that are launching some project. Do you trust 6 dudes in a bus? Do you trust 2 dudes that play underwater hockey? Do you trust the many hundreds of people over at IO Global and Cardano? Like, what team do you want to get in bed with? If there's 2 dudes on a project and 1 dude calls in sick, half of the team is gone. So at some point, adulting takes over, and you go, yeah, cool tech, maybe we'll leverage it, but I'm going to go with a team that I feel comfortable with. I'm going to go call business affairs over at IO. I'm going to go call the people at Polkadot. I'm going to go call the people at Near or Cosmos or Algorand, and I'm going to have them work with us to roll out a professional product. But what about those 2 dudes in the van? Nah, brah. So just bigger picture. Okay. Carrying on down the list, and let me just get down the list really quick. What was some of the things I thought were very interesting? Harmony still performing 35 cents. We've been killing it on that one, but I think this thing has a lot further to run. It's not even a 4 billion market cap. And a few years ago, we would have said that we're like, everything can hit $1 billion. I do believe that, but this is it's doing kind of what Matic does, and maybe in a better way. So we'll see. And Matic hasn't reached probably where it should. Although remember, a layer 2 should not be priced market cap considered similar to a layer 1. If all things are being equal, something that modifies a layer 1 shouldn't have more value, in the same way that a DApp shouldn't have more value than the protocol it runs on. So when you see that, that should be a red flag. Either the protocol is undervalued or the DApp is overvalued. But these things always tend to work themselves out, and not in the app or DApp's favor. If you look at the internet and things like that, when you got companies that would pop up and they would go way too fast, you'd say, wait a minute, doesn't make any sense. How is a company that has an app on iOS more valuable than Apple or something, you'd go, that doesn't make any sense. So let some reason in. Florida Dan, what's up? Let's see, Jeremy 14, DJ Wyatt, Ahmadalk, is that right? Oh, we're just pronouncing words. Okay, let's keep it moving. So that's our little price chat. The only other things I thought you should probably pay attention to, it'd be interesting to see what NewNet does. I think in a day or two, people get their NewNet tokens. They also get their Singularity DAO. I would expect Singularity DAO to probably underperform the next few days. You'll see some people taking their, and this is Singularity DAO that people got when they did the token sale many moons ago. So I imagine what some people will sell because they're still at a 6x, 600% profit. Maybe they've lost some faith. I have not, so I will be restaking. So I'll just end up spending more Ethereum because that's all I do. The AGIX under 20 cents. I think anything under $1 is probably a good deal. So I'm continuing to dollar cost average because we'll be getting NewNet tokens, and that's kind of cool. Looks token. This is Looks Rare. If you guys are selling NFTs, we're going to do a little floor check in a second. We're going to go look. We're going to go to OpenSea. We're going to see what some of the floors are and stuff. But I urge you to take a look at Looks Rare. You say, why? I don't care about Looks Rare. Well, Looks Rare is kind of a better OpenSea, only they have their own token. They, every time you buy or sell something, do commerce on Looks Rare as opposed to OpenSea, you get little kickbacks in the form of their token, and you can stake their token. And the staking is pretty ridiculous. As a matter of fact, let's look it up. Okay, looksrare.org. Let me see what the staking is right now. It is crazy. It is, can you see this? So the calculation includes both looks and WETH earned. So total, so looks APR is 460%. The current wrapped Ethereum, because you get wrapped Ethereum also, is 494%. So you're getting 954% staking. Holy crap. Now, is this going to last forever? No, of course not, because there's more people enter. But you know what? You know who wins? The early people that are early to stake. But I like the idea of getting compensated instead of just lighting money on fire, which basically is what we do with Ethereum and OpenSea. And OpenSea has chosen to go the other way, where they just really want to service their investors and things like that. But I like that 954% APR. I'm a big fan of it. So we can do any of the stuff. Like if you're in Paradise Trippies, we got to spell it correctly. Sometimes these things. Okay, so there we go. Boop. So you can, here we go. And you say, wow, this is cool. Kind of looks like OpenSea, but better. Yeah, it is like OpenSea, but better. So we know there's 998 items. Okay. There's 1,821 owners. Floor price of 0.1. So it's down a little bit. The floor price yesterday was, now that might be the floor price here. So let's give it a check. Let's go here. Let's go to Paradise Trippies. Why? Because we have information. We don't have to choose one or the other. OpenSea, man, is just garbage sauce. All right, let's go. Paradise Trippies. Let's see what their floor is. Well, what OpenSea claims it is. Okay, so here's what we got. 10,000 items, 1.8K owners, floor price of 0.13. So if you go here, and I always click buy now just to get an idea of what's going on. So, okay, that's the cheapest one, 135, 136. You got about 5 of them, and you're at 4. Yeah, so if 5 of these go away, you're at 0.14, which is a pure double on your money from the initial, the mint and all that kind of stuff. So that's kind of cool. So then we go kind of back and forth to Looks Rare. The only difference is if I buy something over there, I'm getting nuked for Ethereum fees and I get nothing back. Over here, I can make offers. I can do buy it nows because some of these are buy it nows. Now I will say, use the filter features when you're banging around on here. But if you sell stuff, it's easy. It's the exact same thing as OpenSea. You go in, you link up your MetaMask account, and then you can do all sorts of cool, fun things. Cool? And so, yeah. And by the way, I got 1,000 of these, not like a huge amount, but I got 1,000 of these, and I staked them yesterday. Cool. And so I've earned, I've got 0.15. This has not even been a day, not 24 hours. So that's kind of cool. I said, what are my looks rewards? So I can go, and we're back to this page again. So it shows, this is the WETH that I could collect. You have to, of course, collect that, right? $50. I got $50 yesterday, and I've earned 12 looks tokens. And you said, well, you're like, well, who cares? Well, who cares is because the token itself is actually performing quite well. It's at $4. I bought it at 387, but kind of cool. Okay, so keep your eye on the 8 ball. All right, that's all there is to that. Let's shift gears a little bit. Here, let's go to one of our fine fellows. He looks pretty cool. He looks kind of collegiate. He looks like this is somebody who you could have a deeply philosophical conversation with. So we are going to discuss, just for un momentito, some of the facets of game theory, because I want to get you guys thinking game theoretical again. Oh, there was one other thing. So we checked Paradise Trippy's floor. We did want to check. I want to check Samote. Let's check the floor on that really quick, and then we'll get into some game theory. So we're at 675 owners, 3,000 items, floor prices, 0.87, so almost 0.9. But we can also go over to Looks Rare. Samote. Where's Samote? Okay. 0.99. So look at that. There's almost a 10 to 12% bump. So you would make way more by selling your Samotes selling at Looks. So maybe the play would be here when you see that disparity, you would go over to OpenSea to purchase, but then again, you wouldn't get the tokens. So you would probably make your offers over here. You would probably do everything over here. I'm going to be using Looks Rare more than OpenSea. But I'm just comparing the two back and forth. And then let's look at the PAYC. Let's see. We got the Bored Apes. We've got the, I probably need to spell it out. Funky Ape Yacht Club. Let me make sure it's the right one. Seem to be many. Funky Ape. You got to look through because people can pull shenanigans. Funky Mutant Ape, Bored Ape. I'm going to guess it's this one with a picture. Let's see how many items they have. Okay, that looks better. 10,000 items, 2,600 owners, floor price 0.07. Okay, so the price here, 0.07. Interestingly, if you go to, this is how I do all my fun stuff. Let's go here. This is the vault. We looked at this the other day, and you'll notice in the vault, the price is 0.11. You say, oh, interesting. So one could, if one wanted to, go from Looks Rare, buy, if you just wanted to flip and you could get past fees and all that. And again, there's a lot of considerations there, but you could buy for 0.07 and you could go sell directly into the vault. And so if you're selling, you're getting 0.09. So you're making a little over 20%. So there's all sorts of ways to make currency units. So don't rule anything out, right? There's all sorts of ways to make money. Some people just make it on arbitrage. I did arbitrage for a whole year in 2018. That was my whole year was arbitrage. There was just nothing else going on. So let's get our smart guy back. Okay. So let's talk game theory. And part of game theory is changing your strategies every now and then because infinite versus finite games, and which we're going to talk about in just a second. But let's reduce it. In order to be good at game theory, you need to have an understanding of critical thinking. And critical thinking is a variety of skills, and so you want to really think about thinking. You want to have good wiring, a good framework for how you arrive at decisions. And it's not that any form of analysis is going to always yield a good answer. You're not going to always win on a trade. You're not going to always do the right thing. But you have to have some framework for decision making, or you're going to be lost. All you're going to be doing is going around saying, what should I do? And what should I do is the wrong question. Why should I do is the question. But you can't form a framework for analyzing why unless you have a system to analyze. You have to be a critical thinker. So analysis, communication, right? Express your ideas, open-mindedness, be okay being wrong. It's okay to be wrong. Do you want to be right or do you want to be rich, right? It's okay to be wrong every now and then. You want to be wrong and rich? It's better than right and poor. Righteous? No. You want to be problem solving. Well, obviously, if you have an ability to create good communication and you're open-minded and you have a framework for analysis, problem solving is part of that. And you want to be creative. Okay. So once we understand that, we want to say, okay, what are the things that will keep us from being critical thinkers? What gets in our way? Cognitive bias. These are the tendencies to think in certain ways that lead us to systematic deviations. That's the key. That's the key right there. If there's anything else, is that cognitive bias, these biases that we all have, they lead us to systematic deviations from a standard of rationality or sound judgment. And this is essentially, why do we make the decisions we make, right? If I'm walking down the street, I see someone walking my way, I see a person gives me a scowl or something like that. How do I behave? And over time, we have these kind of heuristic patterns of behavior and all the, so it's not so much that, oh, you do this because your parents, you're not really trying to cast blame or dispersion. What you're trying to do is you're trying to figure out why you make the decisions you make so that you can be a more reasoned, statistical, analytical thinker, a critical thinker. And cognitive bias are these mental barriers that cause us to deviate from rational thought. So you need to know what they are, and you got to be honest with yourself. You got to look in the mirror and be like, yes, that person there does this. You're the only one that can do that. No one is sitting on a leather couch while some psychiatrist or psychologist tells you to point to the place on the doll where the bad man touched you. That's not this. You need to be honest with yourself in all of your decisions, not just investing, but what are the biases that you have? And for whatever reason they exist, and you need to get those out of your tool shed as quick as possible. You at least need to be aware of them so that when you're making biased decisions, you go, oh, wait, that's bias. That's not rational. You don't want systematic deviations from rational thought, because then you're just like every other stupid animal. You're buying Doge. All right. Then if we are critical thinkers, we can be open and creative, and we can solve problems, and we can admit our mistakes, and we can kind of edit and audit our value. Then we can get out of the way of our cognitive bias, or at least be aware that they exist so that they don't influence and steer us. They deviate us from rational thought. Now we can apply game theory. And this is the study of mathematical models of strategic interaction. And it's not just strategic interaction, it's the strategic interdependence between rational decision makers. So any two agents in any kind of competitive environment, right? And all agents basically, they ask, can I do this thing and what's in it for me, right? So this is the mathematical study of the models of strategic interaction and strategic interdependence between rational decision makers. Okay, it has applications in the field of social science, as well as logic, computer science, and behavioral economics. And a lot of times now, like at the university level, you're seeing a lot of these game theory classes are based on behavioral economics, right? And even if you can go and listen to every lecture ever, and you can do all the classes and all this, and they're going to tell you, listen, game theory is not going to give you answers for every single question. It's going to help build a framework for analysis. You need to start somewhere. And Jerry, he talks about your kind of investor framework, your framework for decision making. Same thing. You need to have some place that you start, a foundation for thinking. And if your foundation is flawed, you can go fix the foundation. You can go erode that. And then your gut instincts start to be more accurate to the realities of the world, because those gut instincts are all based on good, sound, reasoned, principled, logical thinking. And you start adding in some game theory bias. The other thing that's interesting about game theory is the answers that game theory provides for a lot of scenarios are not instantly recognizable. They're not necessarily common sense. Common sense in game theoretical terms, finding Nash, equilibriums and things like that. It's not so easy. It's not so obvious. You're like, well, the prisoner's dilemma is a great example. Me and Jerry both get caught doing some, they think we did a crime. Of course we did it. It's me and Jerry. We did it. But we get caught. They put us in separate rooms and they say, listen, you guys, we pretty much know you did it. Now, if you guys keep quiet, we can't prosecute you. If you both say nothing, we can't prosecute you. You'll probably walk. But if you don't cooperate and the other person does, we're going to throw the book at you. You're going to get 100 years. Like 100 years. Say, now, if you admit what you did, we'll give you 5 years. Say, crap. So you think, well, the best decision is that we both just don't talk, right? Yeah, that would be the best decision, but that's not an equilibrium decision. That's not a game theoretical decision, because I can't be sure Jerry won't talk. And if me and Jerry get busted, Jerry's already said the second he is in there, he's going to be like, oh, Nick's going to tell it, right? I'm definitely telling on Jerry. He should just assume that. And I should assume he's going to tell on me. And that creates a scenario where the decision, while it's not zero, we both walk with 5 years, but neither one of us gets 100 years, right? And that's that Nash equilibrium. The best decision you can make, assuming the other players are going to make the best decision they can make, no matter what decision I make. He can't risk being quiet, and I can't risk being quiet, right? And that's the prisoner's dilemma. And there's a variety of different versions of this game, but that's the basics of game theory. Is sometimes the answer is not the obvious answer. And then you start throwing in economic incentives and perverse incentives and things like this, and it can get very complicated. But any complex game, and look, the crypto market is an incredibly complex game, but so is all of investing. All of investing is a complex game. All of these things are a game. But which line you wait in at the movie theater for your snacks is a game, right? Which lane you're in. Do you turn right because you caught a red light based on, that this is a long red light, you're going to be stuck? Or do you go straight because then if I turn right, I'm going to have to turn left at some point. And then I've got the complexities of making a left-hand turn. And so we do this all the time, but we may not do this with any system. Game theory systematizes, and it takes all these interactions between these strategic interdependence and strategic interactions, and it reduces them to little bits of math. And even if you don't want to go learn the math, which you don't really need to, you want to understand the broad strokes, because as it applies to economics and behavioral economics, you can look back, you can use backward induction, basically going to the end of the game and coming back this way. And sometimes the answers present themselves in very interesting ways. And there's a lot of studies about duels and warfare and conflict that show you that these kind of game theoretical scenarios, they hold really, really accurate, right? Especially the bigger and more complex games, the more as you can reduce it to smaller games. And you realize a big complex problem, like when you're looking at a crypto asset that you might want to invest in, a big complex problem is really not big and complex. You can break it down into little fundamental problems, and you can do the math. That's why we have the 5 T's: team, token, tokenomics, technology, timing, why token, right? Like that's why you have these little ways to audit, edit, and analyze, right? And then you apply the game theory, because now you're saying, okay, now that I think I understand what this thing is, I have a full understanding. How does the world think it is? And how do its competitors behave against it? And what is that going to look like? And while all of this looks complicated, it's really not. So economic key points: focus on the long run and all of the groups involved. I know there's a lot of inputs, but you have to focus on all of those inputs. And then you start canceling out and weighting them accordingly. Okay. Economics can be subjected to vested interest. It most always is. And the long run effects are more complicated than short-term effects. And the easy thing, think of a pool table. You can set up the balls all in the rack the same way, and every time you break it, it's just slightly different because of all of the little particle interactions, all of the little balls touching other balls that touch the wall, and the other ball and the bumpers and all this kind of stuff. And the felt and the mosquito landed there last time he didn't, whatever. So the more particles, the more agents, it gets incredibly complicated. That's why weather is almost impossible to estimate, because there's so many particle interactions just in a very small space that it's very difficult to estimate weather out beyond 5 or 6 days. And that's why you're like, weathermen suck. And like, well, physics is not there yet. And we'll get there. AGI and quantum computing is going to get us a lot closer. But there's just it may be that to correctly predict large systems of particle interactions, you need a computer as big as the entire universe, which right now is problematic. So we can only do what we can do. But if you have a system, and game theory is your system, okay? Assumptions in game theory. In economics, there's an assumption of rationality and maximalization. So it's assumed that players within a game are rational and they will strive to maximize their payoffs within the game, right? I talked about it a second ago. We always ask 2 questions. Can I do this, and what's in it for me? And that's okay, right? And I don't think that's greedy. I think that's rational behavior. We're always looking at payoffs, right? Payoffs for certain actions. Well, these are these assumptions in game theory. When I'm looking around at the people I'm competing with, or the entities I'm competing with, I have to look around and assume what's their best payoff. And if they know what my best payoff is, or most likely outcome, payoffs and outcomes, then they can assume, okay, a rational person would do this, a rational person would do that. You say, well, what about irrational players? Look at the market. Look at, GameStop and Hertz and AMC and all these stonks and all these kind of really dumb plays and all these idiots that are, yeah, true. But you still want to have a game theoretical system of analysis, because you'll still be more right. If you're playing against a rube or somebody who's YOLOing in, that's fine. You still want to have a fundamental framework. None of this is a crystal ball, and that's why no one has all the money. No one has all the currency units, because no one knows everything for sure. But when you start looking at game theory, you start realizing how inefficient technical analysis is in an illiquid, unformed market of illiquid assets with sketchy individuals on sketchy exchanges, right? You start looking at the whole crypto space and you go, wow, this is a effing quagmire. And it is. But there's also a lot of pent-up opportunity in this effing quagmire that you can take effing advantage of. Mother effers. So game theory is used to analyze economic competition, economic phenomena such as bargaining, mechanism design, auctions, voting theory, experimental economics, political economy, behavioral economics, warfare, direct competition, union busting, like strike busting, like all of these kinds of things. Politics. I mean, look at the US. This is where, and again, this is all broad stroke stuff. I don't want you to kind of go down the rabbit hole yet. I want you to just kind of absorb. Okay. So to reduce game theory, the process of modeling the strategic interaction between 2 or more players in a situation containing a set of rules and outcomes. Okay. And let's shift to the main discussion, which was, I want to talk about the principle of finite and infinite games, okay? So finite, these are fixed games, defined rules, defined objectives. Did I write defined objective? I think I did. Let me get that right in case anybody ever looks at this again and says, this guy can't even write some English words. Okay, a finite game, it's fixed, defined rules, defined objectives, defined structure. This is like trading. Oh, I need to make X amount for tomorrow. I need to get 3%, 7%. I'm in, I'm out, I'm done. Okay, and that's fine. And there are times in life when you make a finite decision. The problem with the finite way of thinking is you will always, in the long run, you will lose out to infinite players. So a really good example of in a finite kind of structure for thought is the way the U.S. deals with warfare. We got to go win a war, go win Korea, go win Vietnam, go win what? And there's some great TED Talks about this specific thing. And one of them, it talks about One of the problems with U.S. foreign diplomacy is that it's all about finite objectives. We want to win Vietnam, and the Vietnamese just want to live. Those are different. The desire to live is an infinite game, right? The desire to win a particular war in a particular period of time on some little piece of land, that is very finite. So trading, like being a criminal, robbing bank, that is finite. You have to be perfect every time or you lose. It's very easy. You lose, right? And over time, if it's all or nothing, if it's zero sum, if it's I win some, I lose some, but I have a very finite structure in my thinking, you will eventually lose. There's a reason why there's no giant hedge funds that are known as being big traders. They have a thesis. They express that thesis in a number of trades at first, that where they purchase assets that they believe have a longer term benefit. They're thinking infinite, right? An infinite strategy, right? They want to survive. They want to live. As an investor, do you want to make 3% tomorrow and 7% on Sunday? Or do you want to make many thousands or hundreds of thousands of percent over a 10, a 12, a 15, a whole lifetime of investing? There is no end. You guys see that, right? There is no exit. You're always going to do this. Most people, they say, oh, I want to make this amount of money. Okay, and then what? Well, I'll buy a house. Okay, and then what? I'll buy a watch. Great. And a Ferrari. Sweet. And then what? I mean, most of you here, if you're honest, you probably don't have a plan after I get X amount of currency units. How do you protect it? How do you keep it? Finite thinking won't get you there. Trading won't get you there. Infinite thinking, an infinite game mentality, now that changes things. So in an infinite game, you have changing rules, changing players, no end in sight, perpetual play. This is investing. Infinite players win. Infinite players have hedge funds. Infinite players create generational wealth. Generational, beyond you, beyond your end, or at least the perceived end. We don't know. Come on, if Ben Gortzel gets things right, maybe not. So the what question, that's finite. And it's quickly evaporating. The value evaporates quickly of what? Why? Because the information changes. And as we just read, in an infinite game, the rules change, the players change, there's no end in sight, and it's perpetual play. So if you're asking what evaporates, what has an expiration date, what is like a carton of milk, what lasts for a very short amount of time and then it's gone. Why is an infinite question. It's a fundamental question, and it can extrapolate into the future. When you answer the why questions in your own investing life, it solves lots of problems in a variety of areas that aren't just investing, because game theory applies to your entire life. And this kind of thinking, if there is any one thing that I would attribute to my investing success, I had success in other areas of investing, but I was too finite a thinker. It was, I have a goal, I want to do that. I have this, I want to do that. And I would reach that point and I would be listless at sea like a sail with no wind. And I was like, now what? And invariably I would do something stupid because I was a finite thinker. It took me having to get beat up and lose a few $1,000,000 to understand why it is so important to ask why and not to ask what. I don't really care what someone is doing. I don't care what they did, what they meant. I care why they did it. What is the thesis behind that? What is the framework for that decision? And the why, that kind of mindset, don't ask what, ask why, that's an infinite game. Something that you can extrapolate into the future. So, and I'll leave you with this. When you're competing with others, and we are all competing with others all the time, and you know what that other could be? The other could be the other you. There could be the finite investor you, the finite game theoretical you, and the infinite you. The you that used to play the finite game might play the finite game now. And the you that is going to start playing the infinite game, right? Where you have changing rules and changing players and no end in sight and perpetual play. That's where you need to be, the why thinker. So when you're competing with others, it makes sense to choose the course of action that benefits you the most, no matter what everyone else decides to do. That is Nash equilibrium. And it's not always the most obvious decision. And it's not always the best payoff. It's the best payoff, assuming what the other rational players, how they're going to behave. So it's very interesting, the study of game theory, and it's very interesting some of the connotations it can have and how it can make your investing life a lot easier. So anyway, keep it in mind. Have a great day. Stay out of trouble. Stay in school. We'll get into this more and more. But for now, I think that's a good button in for today. Don't do anything my poor, insolvent, drunk, struggling on meth grandmother wouldn't do. And as you know, she does everything. And so that is not very much. We'll see you on the next one.